So we're going to be taking a look at my dividend investing portfolio here today. The week has been a little bit down for pretty much most investors. So I'm going to show you guys what it actually is doing to my portfolio, as well as the big deposit I made this week, which is awesome, as well as a dividend increase that was announced for a stock that I have in my portfolio because I love dividend increases. So we're going to jump over here. I'm going to turn myself a little bit smaller, and then we're going to kind of just get this started here. So this is my main portfolio. It's with M1 Finance. I call it Dividend Dennis. Currently sitting at $23,456, highest it's ever been thus far, even with the market dropping, but that's also because I've been depositing more. So we'll kind of go over some of that here. You can see right now total gains with everything I've made in profit and dividends has been $3,400. That's a huge drop over from the last week or two just because of everything going on. Let's take a look and go all the way back to the single day. So the last day been pretty rough, down $630. Now, the dollar amount's getting bigger, but the percentages don't change that much when it comes to the 2% down or 1% down for the day. So it's something to kind of keep in mind when getting a bigger and bigger account. The dollar amount might seem a lot more, but sometimes that percentage is fairly common. So if we go for the last week, we're down almost $950. And if we go to the month, we're down $1,200. Now, I do want to show this because I think it's important for people to see portfolios that are not doing well sometimes, right? A lot of us like to show you when our portfolios are green and everything's going great. Well, sometimes that doesn't happen with the portfolio. So I want to show you so you can understand that this is a common thing that happens and you shouldn't stress out. If you got a couple $100 and you're down a little bit, don't worry about it because the market will recover as it always has, obviously because everything is going down together. Now, if it's just one individual stock, that's a whole different story that you want to pay attention to. But if it's all the stocks together, honestly, that's the market recovers at that point. So if we go look at the quarter, we're up still $640, and if we go over the last year, we're up 3,347, and then going back to the all-time. One thing I want to show you guys here with the all-time, because I know a lot of people here are like, whoa, that's a lot of money. It's obviously just getting started. I want to show people, look, I started with $100 in this account. $100, which is huge, right? To some people that could be a huge amount of savings. For others, that might not be anything. But for, I think, most beginner investors, when you're trying to figure out the platforms and trying to figure out what you want to do as far as being, invested in something, $100 can be a lot. So I started with 100. As I started to get more comfortable, I started investing more into my account, and then I just kept growing it over time and started to invest more and more. Like I said, the platform I'm personally using is called M1 Finance. Huge fan of this platform. I'll have a link for them down below if you want to check them out. Till the end of February, they are doing a $30 bonus that you can get after you make your initial deposit. So if you want to go ahead and get started, check that out. Supports me and the channel, but it really does get you started right away, which is huge on that. Now, I want to show you, let's go for the last week. So the last week has been pretty rough, and if I look down here in this portfolio here, I get to, let me make sure it's all on screen here. Yeah, it's all on screen. So here in this portfolio, I have different slices. I got my tech, my growth, my industries, financials, and all that. So out of all of these, it looks like based off of the percentages, my growth has taken the biggest hit. My tech has taken a really big hit too. Same thing with retail. Funny enough, real estate is actually up, and so is my financials. So we got some up, we got some down, but usually in a down market, I try to buy more. Now, this isn't the big drops that we've seen in years past, like the early 2020 or in 2018, but it is somewhat close, and it is still a dip in the market. You can see this huge amount from the 24th. We were at 23,800, and then just in that single day, I think it's a single day. Yeah, single day it dropped. Yeah, $600. So it can happen, and it can be gut-wrenching for a lot of people, but I want to just show you, again, last week it's gone down. So let me just show you here how big it is for me to go through this. So I did my initial deposit this week on the 22nd for $300. Keeping in mind that I've been a little bit more cash heavy. So if you hear that often from a lot of other investors, that just means that as the market is doing really, really well, you tend to slow down on how much you're investing and keeping a little bit of cash on the side. So when things do drop, you have some extra money to be able to invest into the market. And that's what I did. So we did 300 on the 22nd and then another 200 the next day on the 23rd. And then on the 24th, I did another $800. That's the big one I was just talking about. And then on the 25th, I did another $250. So normally I do about $250 to $300 in a given week. This week, I've done a lot more than that. Almost, $1,550 this week. And why is that? Well, that's because the market's been going down. So I've been wanting to get more value out of my money that I've been putting in, even if it's constantly falling, right? When I bought on the let me clean this up. When I bought on the 22nd with $300, got some decent deals, but the market kept going down. So I put another 200 in, got some good deals, but the market kept going down. Put in $800. I think the market was on its way back up throughout the day, but earlier when I went through, it was essentially me getting a pretty good deal there. And then the same thing with the $250, got some more good deals. So it's called catching the falling knife if you haven't been part of investing for a long time. And that's essentially not trying to wait for the bottom of the market. For me, you can see here on my, actually, let me kind of go to the last year marker. So you can see here, I think it was around, somewhat in October, there was kind of like a plateau for a short while. It didn't last long, but then the market kept going up. So if you bought into here, you got a little bit of a discount, and then it kept moving up. Same thing here, early February, there was a little bit of a dip, and then this time around, this is a little bit bigger of a dip. But again, it's just all about investing and staying constant. So let's go ahead and go to my deposit. Oops, that actually just shows you the deposit. So let me go to that trade for that morning. So I bought into 16 things. Some of it I did manually, I believe, and then some of it was just automatic based off of what my M1 Finance stuff decided based off of the percentages. So you can see here, Next Energy, I put in about 75. Lockheed, I did about 20. Home Depot, 40. Texas Instruments, about 15. SPYG, I did 108. That bought pretty much 2 shares or so, almost 2 shares of the stock. I did, a little bit went into Tesla, not on my end, it just based off of the percentages. So I got $2.83 more into Tesla. Did some Costco, Microsoft for 113, and Apple for 130. So both of those got a huge chunk in comparison to what I normally put in there, which is like $15, $20 a piece. We got $15 that went into Visa, $10 I put manually into NRZ, and let me see here if I can scroll. Oh, let me delete those. So if I keep scrolling here, we got Ross, we did it about $7.21, that was automatic. Same thing with Starbucks, that was an automatic $22. Google, I put in 111, and then Facebook, 870, and then Amazon, 115. Now, this is not, again, my normal amount that I've been putting in, but it's just because of the market's churn. So, for example, if I go into Apple, right over here, the share price is $124.10 at the time that it bought in, which got me 1.05 shares. So, not very often am I having enough to put in to buy a full share of Apple, so that's pretty cool. So, the price point is 124. Let's go see what it is currently on Seeking Alpha. So, this is a website I use all the time. So it's currently priced at $120.99. So when I bought into Apple a few days ago, obviously it was a higher price point. Bought in again the next day with $87.51, and that was for a price point of $121.64. So a lot of people might have been really discouraged because they put in money, on the 24th and bought it in at 124, and then the price goes down even more. So what happens is they get discouraged to not want to invest more because they're like, well, if it keeps going down, I don't want to do it. But honestly, that's the best time to keep on buying because we're getting these at a really good price if Apple is to go back to where they were in their 52-week high, which is $144.87. So we're getting a discount effectively at this point to be able to get more shares into the company than we would have if it was at its 52-week high and putting in that same dollar amount. Plus, if we look here, Since I'm a dividend investor, we'll just take a quick look here. The dividend yield for Apple isn't great. It's 0.65, so it's not a lot. But, they're increasing their dividends, so that does help out as well. But the growth on this stock itself has been phenomenal. And if it keeps on going like it's done over the last 5 years, as an example, it's grown 421%. I'm only hoping that it kind of keeps going in that same direction, so we can have more growth. So totally fine with paying for, a little bit more the other day, a little bit less today. If it goes back up tomorrow, great. If it goes down again before the next week, I will probably invest more. So it's just kind of something you got to keep in mind when it comes to investing, when it comes to long-term, options to want to be buying into the stocks and stuff like that, because it can be scary, right? Like putting in all that money. I mean, if we go and look as well too on that $800 day. So SPYG, this is an ETF, so it's kind of a combination of a bunch of different stocks essentially. So this one priced at 55.66, got almost, like I said, 2 shares almost, because M1 Finance lets you do fractional shares, which is great. So 55.66. The next day, bought some more. 55.02. So not as big of a difference as like the Apple stuff, but still huge impact long term. But it's still, again, getting me more shares. So if I go into my holdings, now I'm over 20 shares. I can't even do that. I'm over 20 shares of Apple, which is so freaking awesome. Obviously, they did a split last year, and now I'm having over 20 total. Makes me feel good. It'd be nice one day to have over 100 shares in the company, not only for the dividend payouts, but because of that nice growth that it's going to have over time. And then we can see underneath that we have 41 so pretty much 42 shares of the ETF that I have, almost 10 shares of Microsoft, a little over 2 shares of Tesla, and then so on. So for me, I'm just excited that I'm building up these shares, especially when the market's down, because again, I'm getting that discount. So I really, really like that. Now, I did mention earlier that I did also have a dividend increase announced. So I'm very excited about that. So I'm going to show you guys here on that. There was also something else that I saw something come from Apple. So it says Apple plans annual dividend increase. So it hasn't happened yet, but they are saying that they're going to have that come through. So I'll just show you guys here what that really means. So if we go to the dividend news. So the last time Apple increased their dividend was in April of 2020. So it's pretty much on par to announce a dividend increase in April of 2021. So they did about a 6.5% increase last year. So if we see something relatively close to that, it'll be a nice increase. Ideally, if we can get double digits, which would be really, really nice, that would be the ideal way to go. But that's not the one that got announced. That's just saying that they're going to do it, which I guess that's okay, right? I mean, the expectation was kind of there. But we got an announcement from Home Depot. So right over here. So Home Depot. Personally, love the stock. I think it's a great long-term hold for me personally. The PE ratio is at 20.48, which is below the S&P 500. That's one metric I look for when it comes to looking at these companies. If we look at the dividend scorecard here, dividend is 2.54%. Payout ratio is 52%, which is fantastic. So for every share you have, since they pay out quarterly, you get $1.65 per share. Right now with Home Depot, we own $900 in there, but that equals out to about 3.55 shares. So not too shabby for a really expensive stock as far as price point. I'm always excited about building up even small amounts because it does have a huge impact long term. But this is what's really cool, and I'm going to show you this. This is my favorite thing about dividends. A lot of people don't talk about this. Just like we talked about with Apple, that they're going to be increasing their dividend. Until I see it, it's not obviously for sure. So just the other day on the 23rd, actually earlier this week, Home Depot announced a 10% dividend increase. 10%, that's a lot. I mean, talk about getting a raise for doing absolutely nothing. Getting a raise at work would be fantastic if you got 10% extra on your pay, maybe without any expectations or without having to do any work, which hopefully you're doing work at work. But 10% is huge. Let me show you the impact that this can have, because In small dollar amounts, it doesn't seem like a lot, but as we get older, obviously, but as our accounts grow and we get more shares of these companies, these increases will have dramatic effects on us as a whole. So we went from getting paid, the expectation that we were going to get paid $1.50 was now getting $1.65. So that's a 15% increase, right? Let's bring out the calculator. I don't know why my calculator looks all weird. Hold on. Personally, I just want to fix that. There we go. Okay. So it's a 15-cent increase, right? And this is per quarter too. So this is not for a whole year. This is just per quarter. So if we go back to our stocks here, so we can see 15 extra cents, and then we're going to be getting, we have 3.55872 shares. So because of the dividend increase, and this is just the dividend increase. This is not anything else that we're expecting to get from Home Depot. This is just the dividend increase. That increase equals out to an additional 53 cents. Now I can hear you already. You're like, Dennis, that is not a lot. I can find that in my couch, whatever. But 53 cents is pretty impactful. And that's again per quarter. So if you times that by 4, because they pay out quarterly, that's an extra $2.13 in dividends, right? Like, starting to build up, right? But imagine if we had 100 shares, 1,000 shares, that'd be crazy if we had 1,000 shares. But just in general, if you have more shares as the dividend increases happen, your income effectively goes up. I'm making an extra $2.13 in a year. Do you want to know how much I actually would have to have invested into Home Depot to get that same yield? I'll show you here. I'm going to do math here in real time, which is probably not a good thing. So let me bring up another calculator here. Okay, so with Home Depot, if you have one share of the company, you get $6.60 from them in a full year. Now that we are getting an extra $2.13, we effectively, what's the rate there? So 660 divided by 2.13. So it's like 30%. So 30%. Yeah, see, I'm doing this like in real time. So let me see if I can figure this out here. Hold on. Because I want to show you like what I would have to put in there to get that extra $2 and, oops, is it 30%? So $76. It's fairly-ish close. Okay. So I would have had to put in maybe $80. Let's try 85.0254. Much closer. Okay. So I effectively would have had to put an additional $85 out of my own money into Home Depot at the original $150 dividend price point that they were going to be paying out before to get that exact or close enough to that $2.13. So now that they've raised the dividend by an extra 15 cents, that's equivalent of me putting an extra $85 into the stock to get that same payout, because I'd had to put an extra $85 with the intent that I was going to get paid out, the $1.50 per quarter, which would equate it to $2.18 in the full year. So for me, that's powerful stuff. That's like really powerful stuff. And it gets even crazier as you keep building up and you have more companies paying out even more dividends, which is always a great thing. So you can see here, let me go to, I don't think I passed the ex-dividend, or the, what date was that? The record date. So the record date for this, let's see here. So the ex-dividend date for Home Depot is March 10th. So I can buy more companies. I can buy more shares in this company by March 10th to get that higher dividend rate and the dividend payout on the 25th. But I do have to do it before this date. So March 9th is the last day I can invest into it, depending on what day that is. And then I had to hold it at least until the 11th, so I can sell out if I wanted to on the 12th, which I won't be doing. And then on the 25th, I'll get paid out that dividend. So if we go back here, let's see here. I'll give you an example here. If I don't buy any more shares in Home Depot, which is unlikely to happen at this point because the 10th is a little far away. let's see here. So we have 3.55 shares times $1.65 per share. So we'll be getting, with the dividend increase, because that is the dividend increase price now for the dividends, $5.87 that we're going to get into our M1 Finance portfolio, which then I could utilize to invest into other companies or back into Home Depot or pull that money out if I really wanted to. Now, I do get taxed on that because it is a dividend. Because of my current income levels and everything, that's not bad. I do pay attention to the idea that if my income keeps increasing, that dividends might not be the best option for me. So I'll have to reconsider certain things long term. But because these companies pay out low yields in comparison to what a lot of dividend investors talk about, as an example, this is 2.54%. You probably hear a lot of dividend investors talking about the 4% rule, like you want to get 4%, blah, blah, blah. But I personally like the lower yields, especially as I increase my income. That won't have as big of an effect because I'm not getting paid out as much on my yield. But the dividend growth is where it's all at for me. I love dividend growth. Now, 5-year average has been 20%, but you just saw they just announced a 10% raise. So it's obviously lower than their 5-year average, but at those rates, you can really have a huge impact. And some of you guys might have seen this before with me here on the channel. So yield on cost is a big thing. If you've never heard of it before, it's effectively, depending on the price point you paid for the stock, you might have a different yield on your cost versus somebody who's just buying into it. And I'll show you here what I mean. So this right over here that I just circled, that's year 0. That's effectively where we are today. You are here. And this up here on the right-hand side is 5 years ago. So the graph works backwards on this example. So let me clear this all up. So if we go over here, so today buying into the stock with the current stock price, especially because it's going down, 2.59% or 2.6% effectively is the yield based off the stock price. Now, if you bought in 5 years ago and didn't buy anything more or whatever, you just bought in and left it there, your dividend rate would be about 5.2%. That's a really good yield. I don't know about you, but that's more than 4%. And the reason for that is because they are increasing their dividend yield year after year, which effectively means whatever money you put in and whatever cost that it was at that time, because they're raising their dividend, your yield is going up. That is mind-blowing personally. Like, I love that kind of stuff. Let's go to 10 years. This is insane. Look at this. 10 years ago, I mean, granted, there's a nicer period over there, but 10 years ago, if you bought in, let's say you bought in like $10,000 worth of stock in Home Depot 10 years ago at $37.08 per share, your yield on cost would be almost 18%. Oh my gosh, that is like mind-blowing to me. But again, people don't talk about that kind of stuff because it's not as cool as talking about the 4% now, or obviously the growth on a lot of companies. But I mean, heck, look at Home Depot just on the growth side of things, not even the dividend side of things, right? Like, that is still really healthy growth for a company. So you're getting so many great benefits. I'm not trying to promote Home Depot, although it sounds like it, but just a huge benefit for finding companies that, you know, have good growth projections as well as good dividend projections as well too, because you're getting best of both worlds. Maybe not as aggressive as some of those like growth stocks like Tesla and, you know, some of these other big companies out there that are having exponential growth. But I mean, I don't know about you, I'm totally great with getting 18% on my money, which is insane. Like, that's insane. And then obviously the growth. So that was 10 years. So let's go see what their 10-year growth was. 600%. Can you believe that? 600%. That's massive. If I go back here to the yield on cost, one thing I do want to reference for somebody who doesn't get this as much right now. So the yield on cost back in 2011, the dividend yield back in 2011 wasn't 18%. It was probably 1, 2, 3, 4%, somewhere around that range. But because of that dividend yield increase year after year, the yield is going up for that person, especially if they're not buying any more of the stock, right? Because if you keep buying throughout the years, like all this time, your yield is not going to be as high because you are buying at a higher price point. So that kind of messes with these numbers a little bit. But effectively, you're getting still a smoking deal in comparison to somebody buying today. Now, do I hope that Home Depot has the same great track record in the next 10 years? Yeah. I definitely do. I'm really excited for them to have this amazing growth track record as well too, because if they do it again in the next 10 years, I cannot wait to get 15-20% on my money just on the yield itself, not even considering the growth, which is why I'm okay with buying it, here at Home Depot. Let me go here. Buying it for, 255 today, but then a few days ago, actually that's on here too, 264. I'm fine with it going down and then buying it at cheaper price points if it keeps going down. But I didn't know that this was going to not be the bottom when I bought it on the 23rd. If I knew that it was going to be, what was it, 255 a couple of days later, of course I would have waited and then bought in at a cheaper price point, but we don't know. We always think that we know better or want to know better, but the truth is it's like nobody really knows. We all go through this motion of like, oh, I wish I would have invested more. Of course we do. But at least if you're buying in during downtimes, maybe small increments, that's fine too. $10 a week, $10 a day, whatever you can do, go for it. You're building up small portions of ownership in these companies, and it's going to have huge, huge impacts for you. Like I told you guys, M1 Finance, the app that I'm using, the one that you can kind of see on the back end here, like that right there is what's giving me the opportunity to invest whatever dollar amount I have into these big companies, even if the price point is out of reach for other platforms. So check out the link in the show notes down below. Honestly, it will get you there to get started. You get that bonus if it's still available for you. And then you guys can also join my Facebook group as well too, which I'll have in the show notes too. You guys can check that out. It's really awesome for a lot of M1 Finance users or even just investors in general to come in and hang out and talk with us, because we just like talking about investing and all the things we're doing with that as well too. But I think honestly, the biggest thing when it comes to investing is to stay with it, to stay consistent, to keep on investing, to stay focused. So I want you to check out my video right over here so you can keep on doing that. My name's Dennis, and I'll see you in that next video.